Bazaar Morning Call.
Good morning from all of us here in the CNBC TV18 studios. A very happy new year to everyone who is up like us and watching the markets. That introduction was very heavy, but let's hope that it's also a very happy 2019. Guys, both of you, I know I'm sitting in a separate studio, but Happy New Year to both of you.
Happy New Year, Lata. Happy New Year, Anuj.
Sonia.
Is anyone watching us? I don't know.
No, you know, SGX Nifty is not trading, Lata. So obviously, you know, perhaps the exchanges there have a life.
Okay, but I know you all have not asked me, but my New Year resolution is that this year I'm going to vote for the party which in its manifesto says that the next New Year is a full-fledged holiday. What say?
I think that's a good idea. I think that's a very good idea. And not just first, I think the first, 31st and 1st, both they should be.
Exactly.
I think that's maybe asking for too much. First, let's get the first off. Okay, my New Year resolution, guys, has already been broken. Oh. So it was to eat healthy, and last night I already had a burger at Burger King. So I've broken my New Year resolution. No more resolutions.
No, it starts from 6 a.m. today.
Okay, it starts today. So let's see. And Anuj, what about yours?
You know what? I was on holiday recently, and my daughter was on phone watching cartoon. I said, Avani, what are you doing? Papa, you do the same all the time. So I said, okay, you know, get off the screen. Perhaps less screen time this year.
Okay. No, actually, that's a very good resolution, Anuj. Less screen time, and now that is monitorable in all screens. So that's something we should do. Perhaps read, perhaps play with our children a little more. But for the moment, actually, let's talk a little bit of business since we have to. In any case, we have woken up early and missed yesterday's party. So let's talk a little bit of business. I think the business today will be no business. It's going to be happy holidays for the market since they don't have any cues to react to. Chances are that they will not react. Just a couple of things that happened overnight. Like us, there are other losers who were working. The Reserve Bank put out its financial stability report, and that was good news, very good news. For the first time, the central bank itself saying that the NPA cycle has peaked, that the March 2018 NPAs were higher than the September 2018 NPAs, and the March 2019 NPAs are going to be even lower, from 10.8 in September to 10.3. That's very good news. The other people who stayed up like owls, like all of us, is SEBI, which has ushered in physical settlement of derivatives. That's reform. Whatever else you may say about, the intermediate dissonance it might create, that's a very positive reform. So two positive news coming from the two regulators. The core sector numbers were a little dibbly-dobbly, but let's not talk about bad news now. What do you have to say, Sonia, Anuj?
Well, I don't think today would really matter. You know, the volumes would be pretty low. But Anuj, you tell us, in terms of a trend, so far the month of December has been pretty good to the bulls. You get a sense, there's so many cues lined up in Jan, right? There's the earnings season. We're getting into, election season. I mean, over the next 100 days. How do you think the market would negotiate all these cues?
You know, Sonia, when 2017 ended, it was such a roaring bull market. 2018 was a reminder that you can get negative returns as well in equities, and that's what you did. 2019, I think, could be trending year because we had a sideways year, and the mean reversion, my sense is complete after 2018. Though for starters, because you have general elections and the market will start to price in opinion polls, etc., it would still be sort of sideways for some time. But the mid and small caps have shown signs of bottoming out. I think a lot of money might be made in some of the, beaten down mid caps and small caps, which have fallen not because of their own problems, but because of the market's overall problems. And the first half might be good for economy-related stocks. I think we'll perhaps start to see some signs of that starting today itself, perhaps with the auto numbers. Let's see how they are. But today's move should not be extrapolated because it will be on low volumes. Participation is likely to be limited. The point I made yesterday as well, the zone of 10,900 to 11,000 is a very tough one. 8th time it happened now that you went there and then slipped from there. So that again remains a bit of a congestion zone. And the FI data is indicating that there was some futures buying, but there was some hedging via puts as well. So I think for starters, January, February would remain perhaps a bit of sideways with some bit of mid-cap outperformance.
Okay, well, on the auto stocks, we'll talk about that in greater detail. But as we've been covering over the past couple of weeks, inventory levels are really high this time, especially in pockets like two-wheelers, etc. So let's see whether there is any big disappointment this time. The expectation from a lot of brokerages is that pieces like commercial vehicles could be under pressure this month. But guys, it's the start of a brand new year, start of new promises, new hopes, and of course, new investments. So let's take a look at what our wise experts have to say as we head into trade on the 1st of January. All right, first up, Sanjeev Prasad of Kotak Institutional Equities says 2018 was eventful but disappointing year for global equities. He says the Indian market was among the better performers with a plus 3% returns in rupee terms and a minus 6% in dollar terms. He expects 2019 to be a better year for Indian equities, although the list of events that can potentially derail things in 2019 is quite long. He expects a 10 to 15% return in 2019 on strong earnings revival, moderate derating, and is assuming no major global macro and domestic political shocks. He says Kotak increases the weight of Axis Bank by 150 to 400 basis points and reduces the weight for HDFC, Hindalco and M&M by 40 to 70 basis points to accommodate the increased weight of Axis Bank. They also add Chola Investment Finance to their recommended mid-cap list.
Okay, that's a very positive statement on coming on Axis Bank, which has a new CEO today. Okay, some money market views, and this one comes from Bhaskar Panda of HDFC Bank. He says the year 2018 was tumultuous. In the end, he says, US yields remained flatter, markets less clearer about further action from the US Fed. Given this backdrop, he adds, first half of 2019 is expected to remain volatile as well. Bhaskar says in Indian markets, we have to watch out for multiple factors, including investments, global crude prices, private remittances. But for today, the USD INR market will remain muted as almost all other markets are closed. He expects the USD INR pair to trade in a range of 69.50 to 69.60 for the day.
Okay, Bhaskar Panda also says in the Indian bond markets, the RBI has announced a bond sale worth 120 billion on the 4th of January. He says benchmark yields could move a little higher and he expects the 10-year benchmark bond yield to trade within the 7.35 to 7.40% range for today.
Well, it's time we took our first break. But before that, let me tell you why I am not sitting with Sonia and Anuj. I'm sitting in this special studio because we are going to ring in 2019 on the very first day with a very special guest who's actually waiting for us in the NASDAQ studio to wish us Happy New Year and to give us an idea of how the US markets might behave. That's Willem Bouter of Citigroup waiting by to discuss the fears and triggers of the year ahead. Stay tuned, that's the best voice you can get to understand what the global trends are going to be in 2019.
कुछ ऐसे बिगिनर्स के लिए भी स्टॉक ट्रेडिंग एक आसान नेस्ट नोट ऐप पर अब सब कुछ हो सकता है.
Investment in securities markets are subject to market risk. Read all the related documents carefully before investing.
What happens when you turn simple, straight lines into a masterpiece? You get stunning Kia cars. But what on earth is this astronaut doing here?
Canara Bank wishes you a Happy New Year. Save and grow with Canara savings and current accounts. Canara Bank. Together we can.
We are ushering in 2019 with one of the most prominent voices that can analyze the global economy. Dr. Willem Bouter is Chief Economist, Citibank, but more importantly, in his previous avatars, Bouter has been member of the Monetary Policy Making Committee of the Bank of England. So he's a man who has worn many hats in the past. Dr. Bouter, thank you very much for joining us. For you, of course, it's the night of 31st. First up, a very, very Happy New Year to you.
And likewise to you and yours.
All right. Well, we have to talk business, and let me start at the heart of the market sphere. Dr. Bouter, while the Fed may have said that it is reducing the number of rate hikes, the fear is that the Fed's balance sheet reduction is on autopilot, that it will reduce its balance sheet by the pre-decided amount. Is that a right, premise?
The Fed's balance sheet has never been an autopilot. The schedules that they produced just reflects their expected or their planned balance sheet contraction. If there are objective economic circumstances, such as a sudden tightening of financial conditions, that warrant an interruption or even a partial reversal of the balance sheet contraction, it will happen. They're not set in stone.
Okay, so what you're saying is this planned contraction of the Fed balance sheet, which is $50 billion every month, could well change.
Well, globally, I think 2019 is likely to be a year that most of the world slows down. Not recession material yet, but a distinct slowdown. The US and China both are scheduled to slow down for purely domestic reasons. On top of that, we have the trade conflict. On top of that, we have the temporary partial shutdown of government in the US. We have uncertainty in Europe, both related to Brexit and to rising populism. So there is more than enough, I think, to make for a steady global slowdown during 2019.
Oh, well, given this kind of a slowdown that you are seeing, is there a chance that the Fed may therefore, contract its balance sheet less? It's already indicated it'll hike less, but may it contract its balance sheet less than the current timetable suggests?
Well, the US can slow down, but still grow faster than potential output in the US, right? They're growing currently at a rate of just under 3%. Potential output growth is no more than 2% in the US, in our view. So that means that even if they slow down by a full percentage point over 2019, which would be, I think, a top of the range estimate, then they would still be growing roughly at potential output. So the Fed can, for domestic dual mandate reasons, can continue to hike slowly and gradually, but continue to hike during 2019, unless they anticipate something much worse happening in 2020, in which case they should hold off already in 2019. But I don't think they are there yet.
All right. Well, the Fed last time decreased its rate hike guidance for 2019, reduced it from 3 to 2. But what is your sense then? How many rate hikes are you factoring in? And as well, once again, to come back to the balance sheet issue, how different will be the balance sheet contraction, according to you, vis-a-vis the guidance of 50 billion per month?
I think we're going to see a couple more hikes in rates, most likely in the US, probably later in the year, not March, but more like May or June. And I think we will, for the time being, continue to contract the balance sheet in this very gradual and measured way of 60 billion a month. The Fed will not change its course of action there unless there is visible evidence of faster than expected weakening of economic activity in the US, both current and prospective. And the Fed is, I think, somewhat more optimistic about US real economic prospects than the market, which accounts for the dichotomy in sentiment between what the market feels, which is fear and loathing, right, with the worst year in the stock market since 2008, and what the Fed seems to feel, which is an economy which, in terms of the real economic activity, unemployment and inflation objectives, is still broadly on target.
Okay, so now that'll be a bit of a worry if the Fed thinks the economy is doing better than the market thinks it's doing. Now, let me come to the other worry for financial markets, which is the tariff war. Do you think US and China will find common ground on tariffs before that 90-day deadline expires?
We really don't know what's going on. Yes, we had another, what was it, 4-hour or whatever telephone conversation between Xi Jinping and Donald Trump, but the meaning of that in terms of concrete progress in the trade negotiations is, I think, very unclear. And remember, these aren't pure trade negotiations. These aren't even trade plus tech plus intellectual property right negotiations. This is the new Cold War between a rising hegemon, an hegemon in the ascendant, which is China, and a hegemon in relative decline, which is the US. And that particular fight for global and regional dominance, preeminence, will be fought out in a range of arenas, not just the economic, no matter how broadly define it, but the diplomatic and potentially in different regions, even military. So there is a lot on the plate of Mr. Xi Jinping and Donald Trump that goes way beyond the normal trade negotiations that we've seen between the US and Canada and Mexico. Those were trade negotiations. But between the US and China, this is global dominance negotiations.
Okay, I take that point. It's a Cold War. It's a new Cold War, as you put it, between the largest hegemon and the rising second largest hegemon. So, do you expect 2019 to be a year of, slowing growth, falling investments because of all these uncertainties on the trade front and other fronts?
Oh yes, definitely. This is our central projection. The global economy will slow down, driven by China and the US. The US because of domestic reasons, the unwinding of the fiscal stimulus, and China also because of domestic reasons, the unsustainable credit and debt boom and bubble that they have been using to drive the economy forward since 2008. And on top of that, we have the trade wars, and on top of that, we have the economic uncertainty created by the temporary suspension of part of the government in the US, plus uncertainty in Europe. No. There's no doubt that this will affect capital expenditure worldwide, and this will affect property values, and this will affect asset market valuations. So I don't think we've seen the worst of the stock markets yet, for instance.
Oh, okay, that's an ominous statement to hear on the first of the year. Well, let me just come to the other issue which may have an impact. I want to know your view. President Trump has also withdrawn US armies from Syria and Afghanistan. Will this add to the geopolitical instability in those areas, especially Middle East, and will that in turn influence the price of crude oil and hence financial markets?
I don't think that these actions, even though they may be geopolitically important, have any obvious implications for the global economic outlook in the short to medium term, because this really is just a confirmation that Trump will act unilaterally and sometimes quite impulsively when he feels strongly about something. And this should not come as a surprise. I mean, he has announced since before he got elected that he wanted the US to stop being the policeman of the world and the global disseminator of democratic values. So this should not be a surprise, and I don't attach any great economic significance to it.
Okay, well, at least that's one worry less that it doesn't add to instability in the Middle East. Let me come to the other issue which has troubled financial markets. We have heard President Trump threatening to fire the Fed chairman, Jerome Powell. Do you think if the Fed persists with its rate hike calendar or balance sheet contraction, as you say it will, the president may actually fire Powell?
That is, I think, rather unlikely, because the president can fire the chair of the Fed only, as it's called, for cause. And cause is generally interpreted, although we have no precedent for this, as not excluding simply disagreements about policy. It might be possible, that is firing a governor. It might be possible for him to actually fire Powell as chair, but having to leave him as a governor, which would be a very strange situation, because of course the last rate decision by the Fed board and indeed by the FOMC was unanimous. So I don't think that Trump is going to go there, although you can never be completely sure. His propensity to unexpected and rather over-the-top things is not to be underestimated. But I think that Powell's position looks safe to me.
Okay. Well, then that's another worry less, though it did send some jitters in financial markets in December. All right. Now, what does all your economic prognosis mean for financial investors? Where will smart money go in 2019? Given the slowdown you see in the US, do you think funds will rediscover emerging markets?
Well, a global slowdown is likely to occur during a period of still rising US policy rates and still quite high US longer-term yields. And I don't see any immediate weakening of the US dollar. So this doesn't sound like an external environment within which emerging markets thrive. Of course, oil prices are weak, and that helps a number of emerging markets, including India. But I think there is enough trouble through the capital account and through the trade accounts, trade conflict related broadly, as to offset the beneficial effect of any weakening of oil prices for countries like India.
Okay. Yeah, take your point. What we may get by way of lower crude prices may be taken away if there is a major foreign investor outflow. Okay, let me come to another issue. Since we spoke about Trump and Powell, our own former governor, Urjit Patel, resigned, ostensibly protesting the government interfering with his banking regulations and other rules. Now, is this a worry at all for foreign investors that a governor had to resign on principles?
Getting to a situation where the governor of the central bank feels he has no option but to resign to underline and emphasize and maintain as much as he can of the central bank's independence is not a good place to be. Right? It may have sort of short-term benefits in terms of more relaxed credit conditions, credit growth in the run-up to the elections in 2019, but clearly the country will pay a price for this undermining of central bank independence. Yes, that seems inevitable.
Oh, yes. Well, do you worry there will be more monetary and fiscal looseness because of this event and the new man in Mint Street? And will this monetary and fiscal looseness result in some financial instability later in 2019 or in 2020?
Well, certainly for the next 5 months until the elections, right? I think we're going to have excessively loose fiscal policy and attempts to loosen monetary and credit policy as well. And I think a price will be paid for that after the elections. But since the period between now and the elections is a relatively short one, the damage that can be done, assuming that most of these handouts are going to be partially taken back following the elections, the damage need not be too serious.
Okay. Well, let's hope that way. Then my final question to you, 2019 is obviously important for us because of, the major election that we are getting into, the general elections. What's your sense about the Indian growth story? We seem to have kicked off a kind of a capex growth, but with this kind of a political economy backdrop, what's your sense of the India growth story?
Well, I think there should be a slowdown in Indian economic growth simply because of the worsening external environment. This can be offset to some extent by a greater fiscal stimulus and credit stimulus, but that would lead to a more unbalanced economy, a growing trade deficit and current account deficit, and I think a price to be paid through the currency and through capital outflows. So I see for India too a slowdown relative to 2018, and certainly a more unbalanced economy.
All right, that's very pleasant to hear. But yes, I guess if there's fiscal and monetary looseness, the bill will have to be paid at some time. Dr. Bouter, it's a pleasure having you with us on the first day of the new year and delineating to us what you see by way of economic trends in the US, in the world, and in India. Here's wishing you once again a very, very happy 2019 yet again from all of us in CNBC TV 18.
And a very good New Year and Happy New Year to you and all people at CNBC India.
Well, that's not extremely positive by way of takeaways. The Fed might stay on course with its balance sheet contraction. US economy slows down a bit, but not slow enough for the Fed to change its balance sheet contraction. And third, global economy likely to slow down because power number one and power number two are at loggerheads. And finally, for India, the bill will come up for monetary and fiscal looseness, and that could create financial instability. We will also be affected by the global growth slowdown. Not extremely positive, but that's a reality check as we start 2019. We have to take a break. Well, Sonia, it's back to you. What do you have for us?
Well, on the other side of the break, Lata, we'll drill it down to the micros. So our list of top 10 stocks lined up. Also, we'll tell you how to start your trading year with our technical gurus. So do stay tuned in. Research team, though, is here bright and early this morning to give you the list of top 10 stocks for the day. So very diligently, everyone's here at 8 a.m. What are you looking at today?
Two mid-caps, in fact, could be a good mid-caps. Just FC saw a big bounce from 200-day moving average. Strong pickup in daily buying, so that's something to watch for. Karur Vysya Bank is the other one where you have green. Old generation mid-cap banks have made a huge comeback, and that's a stock which is up 30% in December back with strong delivery. And I tell you something, guys, watch out for GM breweries. These kind of stocks today because earnings season will start soon. And my sense is that because we had such a huge election season in October to December period, country liquor stocks companies would have done really well in that period. And then the market's sort of pricing that in, and some of these stocks are beginning to show some big action.
I think GM Breweries usually ushers in the results season.
Yes.
I think it comes on
Yes.
Jan 3rd.
Yeah. Exactly.
So day after tomorrow we'll have
Yes.
the results. But I'm wondering if the Maharashtra tax on IMFL, Indian-made foreign liquor, will have any... but I'll leave that to Sonal to discuss. For the moment, after the party, you need some medicine. So Ekta is here with something on Lupin.
Yes, absolutely. There are 2 drug approvals today for Lupin as well as Shilpa Medicare. So Lupin, they've received approval for a drug which is basically the generic version of Onfi oral suspension. It's used for the treatment of seizures. Market size $260 million. Shilpa Medicare has received a US approval for an injection which is used for chemotherapy. So that stock would be in focus as well. Both of them would obviously probably see some amount of green on that. Won't probably move the needle too much for Lupin, might move the needle more for Shilpa Medicare.
Okay, well, that's Lupin and Shilpa Medicare. By the way, Happy New Year, Ekta, and Happy New Year to Sonal as well. She's here with us to tell us about all the stocks that are going to be in the news this morning. Sonal?
Good morning, Sonia, and a very happy new year to you as well. Well, I'll start with some stocks and news. JMC Projects and Kalpataru Power will be in focus because JMC Projects, which is the subsidiary of Kalpataru Power, has secured new order amounting to around 600 crore rupees. So positive news coming in there. Kolte Patil, for Kolte Patil Care, has revised the long-term outlook to positive from stable, and that is a good news coming in. On the other hand, for Orient Cement, Care has revised the outlook for long-term bank facilities from stable to a negative. So that is a negative news coming in for Orient Cement. For Credit Access, they have announced that they have completed the direct assignment of around 280 crore rupees and a securitization transaction amounting to 110 crore rupees. We were talking about liquor stocks. Well, the news is that Maharashtra government has levied an excise duty of around 20% on Indian-made foreign liquor. Well, for USL and Radico Khaitan, Maharashtra is a big state in terms of market share, and this excise duty will be levied with effect from 1st January of 2019. I was reading a brokerage report which said that if any further excise duty hike comes in, USL will not be able to pass on that price hike, and that is something that will definitely be negative for all these liquor stocks. Back to you.
Okay, fine. That's all going to be very positive, but I don't think that reduces the consumption of liquor either in December or in election season. So maybe they will, take that, make up on volumes what they lose on margins. Well, banks, I think that's going to be an important positive today for the banking sector. The Reserve Bank, always an extremely conservative viewer of the banking system, says in its financial report that banks are on the way to recovery. That's the very words they have used, and they've even given a forecast that their base case scenario is that total NPAs of the banking system has fallen from 11.3 to 10.8 in September 2018, and from September to March it will fall to 10.3%, which means another half a percentage point fall in total NPAs as a percentage of advances. That's extremely positive, coming from an extremely austere regulator. And while some of it may be factored in, this is positive news. The other positive, of course, which again is largely factored in, but still the markets may choose to celebrate today, Axis gets a new CEO from today. New year, new CEO, new times, could be positive for that stock as well.
Okay, well, we'll keep an eye out on Axis. It has done well. I mean, over the last 12 months, Axis has gained almost about 10 to 15 odd percent, 10% to be precise. Let's see which way it heads this year. But here's a quick recap of our top stocks. Stocks with positive news flow are GSFC, Karur Vysya Bank, Lupin, Shilpa Medicare, JMC Projects, Kalpataru Power, Kolte Patil, Credit Access, and banks like SBI and ICICI Bank. While stocks with negative news flow this morning, Orient Cement, Radico Khaitan, and United Spirits.
All right, Sonia, there's another set of numbers which are going to be important for the market. We can't say right now whether it will be positive or negative, but Sonia may be able to give us a clue. I mean, the December auto sales numbers. What are you expecting? Can you give us some expectations stock-wise?
Well, first up, on Jan 1st, generally a lot of companies are shut, so they may not announce their numbers today. It may come tomorrow. But nevertheless, here is what the expectation is. Nomura has put out a note where they say that, as we know, inventory levels are very high in the system. Our colleagues have been covering that as well. At 5 to 6 weeks across segments, while the average has been 4 weeks. Because inventory levels are high, discounting levels have increased because there's a pressure to clear the rising inventory. So wholesales are expected to be much lower than retails to normalize the inventory levels. Within that, the passenger vehicle volumes will still be flat. The worst performing segment this time could be MHCVs. Now, the industry is likely to decline by 17% year on year. One, because of an adverse base effect, and two, because of the high inventory levels. So just to give you Nomura's expectations, Ashok Leyland, they expect to be the worst performing of the lot. A 14% decline is what they see for Ashok Leyland. For Hero MotoCorp, two-wheelers have done relatively okay. So total sales for Hero MotoCorp up about 1.5%. Maruti will continue to see single-digit growth. This time a 4.5% growth is expected. Again, in Eicher Motors, the commercial vehicle sales will be a disappointment. So CV sales expected to fall by 8%, while Royal Enfield sales not too much of a growth. Remember, they've been in the 72,000-73,000 range for the last 6 or 7 months. This time as well, the expectation is it will be a 9% growth. So all in all, there's a bit of a disappointment that you could see this time, because because inventory levels are pretty high. But a lot of that has been priced into the stocks as well. December has been one of the weakest months for the auto space. But
okay, we'll take a break on the stock-wise analysis and invite our technical experts. In a minute, we're going to be joined by Ashwini Gujral.
I think they've joined us now.
Already? All right, we're fine.
Okay, Ashwini, I think Sudarshan and Mitesh join us now. Good morning, everyone. Happy New Year. Ashwini, what's the New Year resolution?
Good morning, Anuj, and Happy New Year to everybody and the viewers. See, the resolution is to do everything bigger, better, and for longer. Because in this business, once you start to acquire size and you are carrying 200 people with you, it becomes very difficult to manage within a day. So this year, what I do in a day, I'll try to do in 8 to 10 days as well, because the longer you hold, whether it's trading or investing, the bigger the gains. So that's a resolution that this year will increase the gains. And one interesting thing is that the volumes on futures are falling very sharply, index futures, particularly for guys who trade big volume. And options is increasing a whole lot. So this thing is getting so skewed that, the spreads are increasing quite a bit. So options will continue to gain volume, and futures probably will face more illiquidity.
Okay. Well, there is another kind of disturbance that's being introduced with physical settlement of derivatives becoming mandatory starting April for the first set.
Yeah, that takes away the Wednesday and Thursday sort of gambling trades, where you can just buy options, call options at 10 paise, 15 paise, 30 paise, 40 paise and all. That just goes out of the window.
That was going to be my question to our experts as well. You think, Ashwini, how do you see this physical settlement?
See, that'll probably reduce speculation because, a lot of people are just going in and doing intraday strategies, and overall majority of people are not gaining. Contrary to what we may believe, 2-3%, 4% people are holding positions. The rest are all 1 hour, 2 hour, 5 hour people. So if the market has to have longer term holding power, then these games have to stop.
Fair point. Good morning, Sudarshan. A very happy New Year to you as well from all of us. So what's the year looking like for the Sensex and the Nifty?
Yeah, good morning, Lata, and a Happy New Year to you, everyone, viewers. Well, 2019 should at least end better than 2018, and I would expect a lot of volatility in between. But the theme still continues to be that we are in a long-term bull market, and winners will buy on dips, will be on the long side of the market more than being on the short side. So the winners will still be buyers, and that's the view I'm taking as we enter 2019.
Okay, so better to buy rather than not buy at all. Right, I guess that's some sane advice. Mitesh, hi, good morning. Happy New Year to you. What's your advice for retail investors who are perhaps looking out for a better year than the last one?
Good morning, Sonia. Happy New Year to you, the entire team of CNBC and all the viewers. I think there's one very simple advice. I think, try to identify some winning rules and stick to them. I think I've been telling this people all throughout my life that once you understand the risk and reward part of the game, I think you will be trading better. I think that's something which everybody should try and inculcate in their habits. So that's the only advice which I have to share right now.
Okay, so let's talk about the overall setup for trade then. Ashwini, thoughts on index and your individual stock calls now?
Well, on the index, we are kind of consolidating in this 10,750 to say 11,000 zone. So either I want to buy at 10,750 or above 11,000. Trying to chop around between that range, I don't think creates a great amount of value. So that way, we closed our books for last year yesterday, and now we have to look for a bit of sentiment dampener either at 10,750 or a breakout above 11,000. My sense is that it'll take some time, but finally we should come out on the upside. Having said that, should I start with the individual stocks?
Yes.
Yes, please.
Okay. Now, individual stocks, Oro Pharma space late afternoon started moving. So, Oro Pharma is a buy with a stop of 726, target of 750. Pidilite has corrected, all of FMCG corrected yesterday, but this one has done more. So, this is a buy with a stop of 1090, target of 1135. Maruti is a sell with a stop of 7500, target of 7360. Kotak is a buy with a stop of 1240, target of 1285. And Hero Moto is a sell with a stop of 3130, target of 3050.
Okay. Sudarshan, hi, good morning. Happy New Year to you. What would be on your list, not just for today, but any perhaps thoughts on some large caps that one could look at for the year itself?
Yeah, good morning. First, let me tell you the Nifty view. And the view is that we are in a trading range, but I think slowly we'll inch upward. So if you have a long position, just stay with it. Keep a relatively loose stop at 10,800. So let the intraday volatility play itself out without getting stopped out. An immediate target whenever it comes about should be 10,980 to 11,000. Then we'll see. That's the short-term view on the Nifty, staying long. I think the large caps will have their day this year again. Reliance, HDFC Bank I spoke about. These are two stocks I would be focusing on, and Tech Mahindra. So I always prefer to stay with the large caps, and these are investing ideas. For today also, I have banks with me. I was very pleased when Lata said that there's a report that talks about banking sector being a little better now. ICICI Bank and Kotak Bank are both buying opportunities. I've explained how Kotak is now coming out from a bullish head and shoulder pattern. It's not very neat, but it's there. And there's a significant upside left. And ICICI Bank has been consolidating, and another renewed up move is imminent in this week, hopefully. So two banks, Sun Pharma from the pharma stock. Pharma has been doing well. Yesterday was a breakout day. And Kajaria Ceramics, which is in the F&O segment, which was in a bear market, has now recovered and rallied quite nicely. There's more momentum here. So 4 buying ideas. CESC is a short sell just for intraday.
Okay. I was expecting that maybe Axis will come in that list. What's your sense about Axis? I mean, it's just that a new CEO comes in. That was well known, well discounted maybe, but anything in that stock, Sudarshan?
Well, it's really number 3 in my list, and that's saying a lot. It's good enough. But because we had the options of ICICI Bank, Kotak, HDFC, it comes after that.
Sure. Mitesh, good morning and Happy New Year to you as well. Your thoughts on trading calls?
Good morning, Anuj. I think the market, both Ashwini and Sudarshan have correctly highlighted. It looks like a market which is kind of contracting, getting into a range. Let's see where it breaks out. But the counters are also very similar. 10,970 on the upside, 10,750, 770 on the downside are the areas which I would watch. On stock side, I have 3 buys to a sell. CESC is a sell. The overall pattern is slightly turning negative. So sell with a stop at 680 half, look for targets of 645. And I have 3 buy calls. Concor, I've discussed this stock yesterday as well, but a fresh entry could be made now. Keep a stop at 674, look for 720 as your target. DCB Bank, there's some continuation pattern on the upside, so that's a buy with a stop at 166 half for targets of 175. And good intraday charts on JSW Steel. In fact, the entire metal packs did fire a lot of buy signals on the intraday charts yesterday. So I picked up JSW Steel today. That's a buy with a stop at 301 for targets of 318.
Okay, all right, gentlemen, stay on. We will keep coming back to you for more calls. But for now, let's take a short break. Up next, we'll also tell you how to approach the F&O space. Chandan Taparia of Motilal Oswal Securities will be with us. Also, some long-term stock bets from Prakash Diwan. Stay tuned.